My next guest says the quantitative easing-driven bubble in stocks may be over. Joining us now is economist and best-selling author of The Demographic Cliff, Harry Dent. Harry, good to see you. Thanks so much for joining us.
Yeah, nice to be back, Maria.
So I want to talk about this demographic cliff because I think you write on something that is really important. But first, let me get your take on these markets. Do you think it has been warranted, the worst beginning to the year of any year for equities?
Yes, I do. We've seen small cap stocks greatly underperform large caps. That's the first sign that a boom or a bubble is peaking, and we have broken some very key levels from the uptrend. So yes, I think this beginning of January being so bad, no Santa Claus rally, which I forecast late last year, is a sign that we're in for more than a normal correction this year. It doesn't guarantee it, but given other factors, yes, I think this could be the worst year for stocks in many decades.
So you think there's a lot more to come then?
Yes, I do. I mean, I keep saying, Maria, this is a bubble. It's just not a normal bull market. It's been driven by quantitative easing around the world. And I've got a chart that shows something that nobody's looking at. Every bubble since 2000 and then 2007 and now have taken us to new highs, but then every crash afterwards, and bubbles don't correct, they crash. That's the problem with bubbles. Has taken us to new lows. We could see in the next year, year and a half, a Dow as low as 5,500 to 6,000. This is not something investors want to sit through. And again, this is why I say this could be the worst year since maybe 1931 for the stock market.
So we're at, what, 16,000 right now on the Dow Jones Industrial Average? You're saying this could go down to 6,000? I mean, Harry,
yes.
Look, you're talking about if the market goes from 16,000 to 6,000, there's going to be a lot more pain than just stock market investors. I mean, that is a serious collapse in the U.S. economy and in the financial structure. Is that what you're expecting in the next year and a half, Harry?
Yes, I am. This is like 2008, only a bit worse. And again, every crash has taken us lower.
You got to
didn't correct all the debt problems.
You can't just make such a prediction without anything behind it. Tell us how that's going to happen.
I have a whole book behind this. Demographic trends for the baby boom around the world have peaked, and the only reason the economy is growing at all with this generation declining is because of $8 to $9 trillion of quantitative easing. Free money around the world.
You published a book, The Great Depression Ahead, in 2009, and if people had put their money in the stock market when that book was published, they'd be up 150 to 250%.
Hey, we have a newsletter, Maria. We didn't tell people to get out of the market. We keep warning that this is an artificial recovery and it's going to burst at some point. Now we're getting the clear signs. I'm telling you, people do not listen to this are in for trouble in the next year. That's all I'm saying. Bubbles don't correct. They burst.
So what happens if the stock market goes from 6? That was Dagan, by the way, because Dagan correctly noted that you had this book out in 2009 calling for a complete collapse, and that was the bottom, Harry. Okay, that was the bottom of the market over the last several years. 2009.
That book was written and came out in late 2008. It came out before the bottom. It was written way before that.
Okay.
The markets did start to collapse like the Great Depression, and we had $9 trillion of quantitative easing. I apologize for not seeing that governments would print that much money. Nobody saw that. Did you see that coming, Maria? Did anybody predict $9 trillion?
I'm not calling for the world to come to an end. 16,000 to 6,000 is a serious decline.
It's not the world coming to end. It's just a reset to get rid of a bubble that happened for no good reason other than endless money printing.
The Dow Jones Industrial Average going from 16 to 6,000. What does that mean for real estate?
Maria,
what does
it already went to 6,400 in the last crash, and people are saying this can't happen. We went now to 18,350, so all we're going to do is go a little lower than last time. I'm not saying this is a given. I'm saying this is the most likely scenario, and the fact that no economist considers this possible should make you scared of economists.
Harry Dent, you're scaring us, but we're gonna watch this. We'll see you soon, sir. Thank you so much.
Watch it.
Harry Dent coming up.